On to innovation. The Semiconductor Metrology and Inspection Company, providing process control equipment for advanced chip nodes, AI packaging, and power semiconductors that chip makers need to achieve sub-nanometer yield.
FY 2025 revenue $1.0 billion, Q1 2026 revenue $292 million, non-GAAP EPS 142 beat estimates. FY 2026 revenue guided above $1.3 billion.
On to Innovation was formed in 2019 through the merger of Rudolph Technologies and Nanometrics, combining complementary process control portfolios into a single semiconductor equipment platform.
The Atlas platform for optical critical dimension metrology and the Dragonfly G5 for advanced packaging inspection became the company's flagship growth drivers as AI compute build-out accelerated.
The AI infrastructure wave created a new customer segment: memory, advanced packaging, and power semiconductor manufacturers requiring precision metrology at extreme tolerances to enable next-generation chip stacking.
Advanced nodes and logic generate approximately 50% of revenue. Leading-edge fabs using Atlas G6 systems to measure gate dimensions and overlay at the 2-nanometer node and below.
Advanced packaging and memory contribute 50%. Dragonfly G5 inspection systems serving high-bandwidth memory, CoWoS packaging, and the AI chip interconnect layers that demand zero-defect surface quality.
FY 2025 revenue $1.005 billion, the company's first billion-dollar year. Gross margins above 50% and non-GAAP operating margins targeting above 30% by Q4 2026.
Q1 2026 revenue $292 million, non-GAAP EPS 142 beat estimates. FY 2026 revenue guided above $1.3 billion, more than 30% growth.
KLA Corporation is the dominant process control competitor. Significantly larger, broader product portfolio, deeper customer relationships at leading-edge logic. Onto competes in advanced packaging and power, where KLA has less focus.
Applied Materials and Lam Research compete in process equipment and etch, adjacent markets but not direct metrology competitors. Hitachi High-Tech competes in electron beam inspection at different price and performance points.
Onto's advantage is advanced packaging specialization. The AI chip stacking era created demand for metrology equipment that the legacy KLA portfolio was not optimized for, giving Onto a structural growth window.
Onto Innovation sells globally. Taiwan and South Korea are the largest markets, where TSMC and Samsung drive advanced packaging adoption. US, Japan, and China round out the customer geography.
Key customers include TSMC, Samsung, SK Hynix, and Micron, the chip makers building the compute layers that power AI training and inference, where Onto's tools are qualified in high-volume production lines.
Michael Plasinski has served as CEO of Onto Innovation since October 2019, leading the company through the Rudolph Nanometrics merger and positioning it for the AI-driven advanced packaging inflection.
Plasinski brings over 25 years of semiconductor capital equipment experience. Under his leadership, Onto crossed $1 billion in revenue in 2025.
Onto Innovation. The Semiconductor Metrology Company, $1.0 billion in FY 2025 revenue, with Atlas G6 and Dragonfly G5 platforms positioned at the intersection of AI compute and advanced chip packaging.
Q1 2026 revenue $292 million, non-GAAP EPS 142 beat estimates. FY 2026 revenue guided above $1.3 billion, over 30% growth as AI packaging demand drives Onto's metrology platform.
Process control in semiconductor manufacturing is one of the most technically demanding fields in industrial equipment. When Intel, TSMC, or Samsung builds a chip with transistors measured in single-digit angstroms, smaller than the gap between atoms, any defect in the lithography, etching, or deposition process that goes undetected destroys yield. Onto Innovation makes the measurement and inspection equipment that chip manufacturers use to verify every layer of the process is performing within specification. As chips get more complex, the inspection requirements get more demanding, and the value of Onto's equipment increases proportionally.
Revenue for Q1 2026 came in at $292 million, essentially in line with the $292 million estimate and up 1.8% year over year. Earnings per share of $1.42 beat the $1.38 consensus by approximately 3%. The modest revenue growth rate understates the strategic importance of the quarter because the mix shift toward advanced packaging and gate-all-around node inspection tools, which carry higher ASPs and recurring service revenue, was more pronounced than in any prior quarter.
Advanced packaging is the tailwind that will define Onto Innovation's growth trajectory over the next 3 to 5 years. As chipmakers reach the physical limits of traditional scaling, shrinking transistors smaller, the industry is turning to advanced packaging techniques that stack multiple chips in three-dimensional configurations with extremely fine interconnects. Technologies like chip-on-wafer-on-substrate, fan-out panel-level packaging, and hybrid bonding are all growing rapidly as the AI hardware market demands more compute density. Each of these packaging technologies requires inspection at every bonding layer, which is exactly the application where Onto's tools are most differentiated.
CEO Michael Plasinski has led Onto Innovation since the 2019 merger of Nanometrics and Rudolph Technologies, the two companies that combined to form Onto. His background in optical metrology, the science of measuring geometric properties with light, is directly relevant to Onto's core technology. Under Plasinski, Onto has consistently invested in R&D at rates above 15% of revenue, which is at the high end of the process control equipment peer group. That investment is why the company is positioned in gate-all-around transistor inspection, which is the most challenging measurement problem currently facing semiconductor manufacturers.
The gate-all-around transistor architecture is the technology transition that will drive the next several years of leading-edge chip manufacturing. Intel is deploying GAA transistors in its 20 angstrom process node. Samsung is using them in its 3-nanometer generation. TSMC is expected to transition to GAA at its 2-nanometer node later in 2026 and 2027. GAA requires inspection techniques that are qualitatively different from those used for the prior FinFET generation. The geometry of the transistor is more complex, and the defect modes are different. Onto's specialized optical and e-beam inspection capabilities for GAA are a competitive advantage that is difficult to replicate quickly.
High bandwidth memory is the other major demand driver emerging for Onto. HBM, the stacked memory architecture used in AI training chips like NVIDIA's H100 and B200, requires precision bonding of multiple DRAM dies with thousands of microbumps per die. Each microbump bond requires inspection for defects that would cause electrical failures in the finished package. SK Hynix, Samsung, and Micron are all ramping HBM production aggressively to supply NVIDIA, AMD, and the hyperscaler in-house chip programs. That ramp is generating a wave of inspection tool orders that Onto is well-positioned to capture.
Customer concentration is the primary financial risk at Onto Innovation. The company derives a significant portion of revenue from a small number of leading-edge foundry and memory customers. TSMC, Samsung, SK Hynix, and Intel collectively represent the majority of Onto's business. If any of these customers reduces capital expenditure in a given year, as happened across the industry in 2023 during the memory downturn, Onto's revenue declines sharply. The current upgrade cycle in advanced packaging and HBM is providing demand visibility, but investors should be prepared for the cyclicality that is inherent in semiconductor capital equipment.
China represents both an opportunity and a risk for Onto Innovation. The company had historically generated approximately 20 to 25% of revenue from China-based customers. U.S. export control regulations implemented since 2022 have progressively restricted the equipment that Onto can sell to certain Chinese customers without export licenses. Management has navigated this by focusing on domestic and South Korean memory customers, where export restrictions are not a constraint, and by qualifying non-restricted versions of some products for China shipment. The net impact has been manageable, but additional tightening of export controls could create a more significant headwind.
The service and software revenue stream at Onto Innovation is an increasingly important part of the financial model. Once an Onto inspection tool is installed in a customer fab, the company generates recurring revenue from service contracts, spare parts, and process optimization software licenses. This recurring component, which carries gross margins above 60%, provides a base of revenue that persists even when new tool orders slow. Management has guided for service revenue to grow to approximately 30% of total revenue by 2027, up from approximately 23% in 2025.
Valuation at Onto Innovation is moderate relative to the broader semiconductor equipment peer group. The company trades at approximately 25 to 30 times forward earnings, a discount to the ASML and KLA Corporation multiples that reflect Onto's smaller scale and higher revenue concentration risk. However, if the advanced packaging and GAA inspection cycle plays out as analysts expect, Onto's forward earnings estimates are likely to move higher, which would make the current multiple look more attractive in retrospect.
The key metrics to watch at Onto Innovation: new tool bookings in advanced packaging versus front-end inspection, ASP trends per shipped tool, service revenue as a percentage of total, and any commentary on China revenue trajectory under current export control frameworks. A sustained bookings-to-revenue ratio above 1 times is the signal that demand is running ahead of production capacity and that the next several quarters of revenue are already secured. The gate-all and gate-around semiconductor architecture transition is genuinely transformational for process control, and Onto Innovation is one of the clearest beneficiaries. Traditional FinFET transistors could be inspected with established optical techniques, but gate-all-around structures are three-dimensional, require precise measurement of internal gate dimensions, and involve new materials that create novel defect signatures. Onto's Dragonfly platform was specifically architected for these measurement challenges. Customers can't ship yielding wafers without process control at these nodes, which means Onto's revenue is essentially embedded in the capital spending plans of the world's most advanced chip makers.
The high-bandwidth memory story is equally compelling. HBM3 and HBM3E demand from AI accelerator programs, driven by NVIDIA's Blackwell and its successors, requires new levels of process control at every stacking layer. Onto's advanced packaging inspection tools are seeing pull from HBM manufacturers in Korea and Taiwan, and management has indicated this segment is growing faster than the rest of the portfolio. The AI compute build-out has effectively created a second demand driver for Onto alongside the leading-edge logic node transition.
Export control risk is a key investor question for any semiconductor equipment company with China exposure. Onto has been proactive in assessing its portfolio against the updated BIS entity list and October 2023 rules. Unlike some peers, Onto does not have a large trailing node China business that would face cliff risk from additional controls. The company's revenue is weighted toward leading-edge customers outside China, which provides relative insulation. Management acknowledged the ongoing regulatory uncertainty on the Q1 call, but expressed confidence that its core process control served by the Dragonfly and Iris platforms addresses needs exempt from current controls.
Everything on Charged Alpha is financial education and analysis, not personalized investment advice. Past performance does not predict future results. Always do your own research, understand your risk tolerance, and speak with a qualified financial advisor before making investment decisions.
Ooh-wee-doo! That ticker tape starts dancing fast. A bull market thrill that's built to last. Dividends are ringing up the swing. Listen to that sweet ka-ching. It's a Wall Street swing. That fast-paced rhythm makes you sing. Yeah, the Wall Street